Hello, everyone. Welcome. This is Tuesday, the 17th of December, 2024. Welcome, everyone, to this stream. What we are going to do today is review the important earnings and earnings metrics that you need to use to pick good stocks. People really always underestimate this, but it's very important to find what works. So let me share my screen. I hope you guys all see my screen here. Um, and off we go. So this is EPSmomentum.com, an app that you can subscribe to and use. There's about 14 application here that you can pull up and get some data for every single stock. I'll let you review. Uh, there's videos everywhere. So videos here under each widget. There's a start here button here on the top that you can play for 15-minute tutorial. But yeah, so today really focusing on earnings. So the first the 1 minute version of summary of what the system does. So it looks at earnings, it looks at revision, it looks at the drift, it looks at many things, even options and skew um, to predict well, not to predict, but I mean to help you pick stocks, and that's very useful. The second thing that it does, it has a model based on the earning momentum that you can see here on a chart. You can see all the scoring, EM 23, minus 15, 9, 10, 12, and so on. And what it does is really quantify the power of the earning momentum for every single stock. So you can see, for example, when it's negative, -2, -8, -9, -15, 14. And then it turns positive. Every score greater than 20 is truly enormous and extraordinary. So see, 18 is already insanely high. So what did that mean for this stock? It meant 167% EPS change, growth and sales, 23% change, plus acceleration and trend. So really ready for a rally. And then EM 20, 30, and then now back to 10. But basically rallied from 322 to 620. So about 100% growth in less than a year. So this is what really the system does. It also calculates the P&L on paper, of course. Again, this is not investment advice, really helping guide you P&L on trailing stop and P&L on a fixed stop or an adaptive stop, which is based on fundamentals. Um, so yeah, just displaying the strategy here, and you can see the performance for Meta was 1,500% in a few years, and this guy was 120% with the trailing stop. All right, so let's go into earnings. So first off, I want to make sure that the stock that I look at is in a green light, not in red light. So that's always helpful. And then there's the timing piece. So the timing piece is really what timing do I apply? What are the good days to buy or to get in potentially in a stock, or at least to study it very thoroughly, potentially for an investment. So see how this is negative here. All three of these variables should be above zero. It's negative here, negative there. So again, not a very good sign, but all three of them turn positive there. However, EM turns 10, so which is less than 20, so would keep you away from the stock. Um, so you wouldn't get in here. But that's what it is. Coupling fundamentals to prices. All right, let's focus on earnings. There's a couple of shortcuts that you have on top. So revision winners, acceleration, and it will go straight to the screener and come up with all the stocks that like pre-can searches that are really very useful for you to use. Um, all right, let's start with best stocks. Um, so best stocks is really always EM greater than 20, TM greater than 0, MS greater than 0, market score greater than 0. So we can start to be a little bit less stringent on that. Let's say EM is just positive. Let's keep the TM unfiltered and market score unfiltered. I'm going to remove all this. Market cap at $1 billion. And maybe I remove those distance to high fields. So really, I'm filtering on EM. I want to have positive EM, so positive earnings. So how do I go about spotting these stocks? So very quickly, I can click on the matrix here and have the earning per share for the stock, for each stock. So here I have 6.03 versus 4.39 a year ago. That's a 37% growth. And that's a deceleration of 22%. That's why maybe the stock has been not rallying or kind of flat. So that's on EPS standpoint. On EPS standpoint from sales, this is what we're getting: 19%, minus 3%. So really, again, slowing down, but the growth is here. It's here. So that's why you get a positive EM, but not one that is greater than 20. So you can monitor those earnings very nicely. There's also a section in the screener where you can look at the earnings and a series of analytics that you did. Sorry, I apologize. A series of analytics that you can use. So, for example, you can use the growth of earnings from the current quarter to 4 quarters ago. You can click on that little eye here that tells you what the field is about, and that's it. So here I have the column that shows up, and I can say I want that earning growth to be at least 5%. And then I went from a few hundred stocks to 643. And I can do the same with sales. So I picked the sales Q over Q minus 4, and I put sales greater than, let's say, 5% as well. Okay. So now it's 565. So that's pretty useful already, but we still have 500 stocks, so we want to we want to filter further. So one thing that is very important is the acceleration. Growth. We looked at this number, we just filtered on 5%, but and this one as well, but we didn't take into account the acceleration here. So the acceleration, we can take it as a value. So the acceleration from the current quarter to the previous one, which, because it's the second derivative, it actually takes compared to the growth of Q minus 4 to Q minus 5. So it's really like a quarterly year-on-year comparison of acceleration, right? So this is important, and maybe I want acceleration to be positive, greater than 5%, right? So now I have 321 stocks. I can click on Garmin, for example, and I get positive acceleration, positive growth, and I get a nice stock rallying here. So that's useful. So that's acceleration on earnings. We can do acceleration on sales as well. So that would be this one. Notice some of the fields are in red. Those are important fields that you can use, and popular ones. And so I filter on 5% as well. So sales has to accelerate by at least 5%. So Newmont Corporation. Actually, Newmont is really on a downturn, but sales is up 20%. 85% growth, but 20% acceleration, and earning per share 6%. So much less. So there may be other reasons for why the stock dropped, but basically the earnings were decelerating drastically from 80% to 6, right? So maybe that's one really negative here, without reading any news or anything. That's really something that that you wanna pay attention to. All right, so now it's good. I have a bunch of filters on growth and acceleration, and what I want now is I want really analyst opinion about the stock. So first off, you can place your price target, mean, and high or low here. That's very easy. Hold on, let me just reload these. And and you can have your price target mean, low and high, and see what analysts predict the price will be at some point. So actually, we can put the stock price as well, so we can compare. So price, right? So the price is 214, and let's say at about a 1 year mark, it's 215, so it reaches its full potential. I would say there. Career mining is 631. I could go to 10, and so on. So you can take that, but you can also look at the recommendation now, recommendation 7 days ago, and recommendation 1 month ago. So these are all based on a score that is the one is the best, five is the worst. So you can say what are the best stocks right now? Let's say between a one and a two, and I can see if that recommendation evolved over time. So 67, 62, 57. So it's getting a little bit better for Care Mining or Monolithic Power. Let's click on Monolithic Power. So stock is down, but it's getting better. So that's important to have the rating. So this is really like a buy rating. A one or close to one would be a strong buy. A two would be a buy, and three a neutral, and then sell and strong sell. So again, you can filter on this. That's some people watch that. I personally don't really. I do look at price target raised. So you can say, give me at least price target from 1 to 6, and I can see how many raises in the last few days we had on each of the stocks. And now I'm down to just 13 stocks because there's very few of them. But let's say the Clorox company, for example, price raised, acceleration up. So that's good. Again, this is an interesting field, but really we're beating around the bush here because the most important is the revisions. Revisions is this widget here, this application. You can focus just on that yellow or gold line here, which is the revision score. That revision score is really the estimates revision over time for every single analyst. So you can see the current year, next quarter, sorry, current quarter, next quarter, current year, next year. And then what we do is every change, we kind of increment that revision score by a few points based on that change. So what it does, it creates really like a nice trend of positive revision or flat revision or else. So you can see that revision has been trending up nicely. That's why I guess the stock price held. But you can filter on that. You can filter on these values. You can filter on the actual value number or percentage. So 24%, you can filter on that. So what you do is you go into the estimates revision, percent change, or percent or change in value, one or the other. So percent change is important because I want to know how big of a percent that revision was upped or reduced. So you sometimes you can get thousands of percent, meaning the revision score was very low. So, for example, Revolve Group, um, it was zero something, and then it went to three, so that makes thousands of percent. But you get the idea. And sometimes, because of this reason, it's actually better to filter by value. And now I want the positive revisions in value, right? And I want to sort by them. So Carvana shows up at the top. I can click here, Carvana, and see the revision has been constant all the way, up and up and up and up, right? There's also another data set here in blue, which is a different set of analysts. There's 6 analysts here, 12 here, and you can see the revision in history of those two. So they kind of following the same curve. And this is sales. So you click on sales, and then you have the increase in sales. So sales is a little bit less important here, but I mean, still, useful to see. You can put them on the chart as well. So you click on data, revision, and there you go. Right on the charts, you can go back in history and see how they evolved over time. You can also compare it. I can compare it to um, let's just see. I AutoZone, for example, and I'm gonna put the revision score, and there you go. So here you have the revision score for Carvana, the one for AutoZone, and yeah, I mean you can see that AutoZone is down. Stock price is not too affected, but the revision is really down, whereas Carvana it's up very significantly. So really give you a different spin on when you're comparing stocks. So that's really useful. Field is the revision change over the last 3 months. So that's more. It's not limited to 1 quarter, but it's really for 3 months, and you can see the most positive ones again got up several thousand% or 100%, depends where you start from. But yeah, still a very useful field to filter on to get a good candidate. Okay. The other thing is the long-term estimates, long-term growth estimates. So this is important, which is here. You want companies that have a significant long-term estimate. Not companies, not all companies are rated, but let's say you want a company that grows, 10% at a clip. Since you selected a 5% earning per share growth, maybe a 10% 3 to 5 year growth is necessary here. So you get Revolve Group, you get Generac, so you can click on Revolve again, and here you get the idea, right? Really growing and growing. So this is the revisions and the earning per share and the estimates revisions. We can also remove the criteria on the acceleration and focus on companies that have sequential positive acceleration in sales and sequential positive acceleration in earnings. Um, Sequential positive EPS acceleration. There you go. Those two fields. So now I have those two columns here, and one means that it's been 1 quarter of acceleration. But what I can do for earnings, so again, I can click here to get the full explanation of what it is. But again, what I can do is put this on two. So on 2 quarters in a row minimum of earning acceleration, right? So here I have CTRE, and okay, so EM27, yes, but the stock is down. Maybe there's other reasons for that. Maybe it's about, I don't know, the current environment. So let's, that could be it. And here I can also be same thing, stringent on change, sorry, on acceleration in sales. And then I get Lincoln National Corporation or Macom, MTCSI. Look at this growth in earnings. We can look at the matrix as well. So yeah, truly, truly important as well. Really in a trend here. EM is not all the way to 20. And let me explain why it's not. What we do is we calculate the trend. So see the trend was 178, then 150, then 201. That's pretty bad. That means that last year was a bad year. That means that that 33% is fake. It's a fake 33. Really, if it would have been like a normal cruising growth, it should be 185 or 190, and that would have just been like a 10% growth. So that's why you get penalized for not having a full proper trend. in earnings. So that's the reason. Right. So we've done acceleration. Again, we can go very stringent here. We can say 2 quarters in a row in sales. We're now down to 30 stocks. I can also filter by price. Let's say I want all the stocks that are greater than $10. And I can sort by the revision score. So Raymond James Financial, Uber Technology. So I click on Uber, and here I get 20% growth, acceleration over the past 2 quarters, both in sales and earning per share. And the stock price is down, right? So this is a concern. I don't want that. So what can I do to avoid this? Very easy. There's a field that you can pull up, which is the price change since the beginning of the quarter, which is this one. Price change since the last earning report day for the stock. So you take the report day, then you take the price at that moment all the way to now, and it has to be positive. So we can filter on that, which the field we have it here, and let's say greater than zero. Now I have 15 stocks, right? So Sprout, Farmers, acceleration, growth in earnings, and it's been growing steadily. Look at that, 20%. It was just a little bit of a 7% here, but 40% growth in earnings, 14% in sales. It's accelerating. It's been accelerating for 6 quarters, and it shows in the stock price. The stock price is just on a tear. And what you can do is really, if you want to filter on the best stock price you can find, you can filter by the distance to the high. So you take distance to high, price distance to high, this field, and then you put it on. And there you go, distance to high. I want all the prices that are, say, 15% from the high. Doesn't remove much, but because these guys are already very, very good. Amphenol Corporation. And here you go. So that's interesting thing where you get 28, 30, 26, 30, 11, 0, 5, minus 12, and then in momentum it comes up again. So been accelerating for 4 quarters and in both earnings and sales. So again, interesting to see there. So again, very, very good name. If I'm done with that search, I can click on screen and click on save, and then it would save the screen, and then I can run it. Now I want to run something about, I want to talk about valuation and P ratio, because when you talk about earnings, sometimes you want to talk about earnings per share and P ratio. So we have something special at EPS Momentum. We look at the cashback PE. So it's basically the PE in years of how much time it will take you to get your cash back. So if you're buying one share here, you have to pay $75, and you'll get the $75 back after a couple of years. So how many years? Well, so if it was the same as last year, you would make a little bit more than $1 on year one, and then year two, you'll get maybe a little bit more. So $2, year 3, 5, based on that long-term growth, you're gonna get $9, and then all the way to year 30 with a terminal rate of 3%. So what we're doing here is we're really discounting all those earnings. Well, not discounting them, but just counting them, and adding them up so that you get your $75 back. So it'll take you 20 years to get your dollar back. That's how it is. So the mean here is 20 years. If I remove the last price here, the PE you would hear on TV or on the web is 46. The forward is 41, and the forward year two is 35. But the reality is, if you really take growth into account, the P is 20, right? So is that expensive? Well, historically, it is fairly expensive. It used to be 11, now it's 20. So the stocks tend to be a little bit more expensive now than it was before, and you can run that on AMD, for example, or any stock, and it will produce the chart for the P ratio and give you the right value. So this is a good example. AMD is a 27% growth company, P of 16, traditional P of 45. When I put Intel, P cashback P is 45, only 10% growth, and P of 18. So the traditional metric tells you it's a cheap stock. The actual growth-based metric tells you it's a outrageously expensive stock at 45. And it become more and more expensive. It used to be 7 and 9, now it's 45. So it's really, really expensive compared to the growth. So again, you can filter that in the screener as well. So you go into price analytics and price ratios, um, cashback PE. So I am going to remove these two, cashback PE, mean, and let's say I want a cashback PE of, no more than 18, for example. I can also filter by that cashback PE. And the interesting thing is you can also pull up the traditional PE on the side. Let me just remove that. Traditional PE. There you go. So P of 12, it's 7. P of 15, it's 10. P of 24, it's 12. So T-Mobile. Let's click on T-Mobile. Right. So stocks rallying. Let's remove the price here. And the P here is 28, 24, 22. But really, with a 20% growth, it's a fairly cheap company. 12. It used to be 8, 9. So it's a little bit more expensive than it was previously. But yeah, I mean, it's getting there. So very important here to 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 see if it's an expensive stock or not. All right, so I mean, I went over several things. Maybe one last concept is the earning cycle. So this is a visual that tells you how the stock is evolving. Usually, stock goes from turnaround quadrant to earning momentum to growth trap to neglected. This is the revision score over the earning momentum. So how it works is most of the time there's no earning momentum, then the revision goes up, so stock will have a tendency to turn clockwise. Revision goes up. As it goes up and goes into the turnaround quadrant, because revisions are up, there's a momentum that starts up. That's earning momentum starts up. So potentially earning momentum is getting better. So now you're entering the EPS momentum quadrant. This is where you want to be. Um, and and then eventually the revision starts to head south, which will push you into the growth trap, which is great momentum but declining revisions. And then the momentum will just then fade and go into neglected, so it'll be like a circle. And you can type um, any of these stocks we have here, and you can see the revisions. You can see the cycle of earnings. So here the interesting thing is that the revisions was negative. It became positive. The momentum was negative, became positive. Oh, sorry, the revision was up, but it's declining a little bit. Momentum is up. Um, so in that earning momentum, but we're heading into the growth trap quadrant. So as you can see, the price is also dropping. So it really tells you which company is in which cycle, um, which is useful. So yeah, the have a run at all these searches. The revision winners is always a very good search that helps you to get started very quickly. Revision winners here, Hudson Bay. Quickly, it gives you all the best revisions you can find. You can go by value as well. We find Carvana again. You got Smart Sheet. Let's have a look at Smart Sheet. All right, this one has been acquired. Looks like it. Toast. New momentum is up, revision is up, stock price is up, everything's up. So very quickly, by just clicking on a button, you get some nice results. so yeah, you can really get really far with this by just clicking on one or two buttons. So that's it for today. I hope it was useful. Going over estimates and revisions and earnings in the earning cycle. There's more to the application. We didn't talk about options. We didn't talk about the shorts. So we'll have the opportunity to do so on another live. But I hope you found it useful, and thank you very much for your attention. And I'll see you next time. Bye bye.